No, I'm kidding with you. Our plan for tomorrow will be pretty easy. Buy low, sell high, avoid the middle, focus on failures, and watch the pendulum swing until we can get a strong breakout of this range in one direction or the other. Now, the euro may be just a little bit ahead of where the gold is, right? Gold, if it does end up collapsing, may turn into a trading range. Same thing on the S&P. So we'll have to wait and see what this happens, obviously, for tomorrow. But right now, the euro may be tipping its hat ahead of gold tomorrow. We'll have to wait and see. But bottom line is, trade what we see here right now. The last test of the range was at the high, which means the rotation should send us back to lows, where buyers will be looking for seller failures to buy the low and then go back to the high. If we go back to the high, then sellers are looking for buyer failures to sell back down to that low. There is a small, very small possibility that this lazy bull channel may play a factor tomorrow, but that's unlikely because when the session starts in a range, it usually will ignore these flat channels and stick to rotation from high to low of that range. One of the biggest mistakes that I made early in my career is ignoring a trading range and trying to use this pathetic channel. Okay, now, my rule of thumb, and we talk about this in a lot more detail in the intermediate course, is I'm looking for a channel that has about a 45-degree angle, right? If I'm seeing a channel that's looking like this, that's not really what I'm looking for. These channels are more likely ranges, right? They're more likely ranges that we just haven't looked at close enough. So when it comes to a channel, the most reliable channels are always going to be the ones that fit that 45-degree angle, right? This is not one of them, right? So when we look at this chart, the very first thing I thought of when I looked at this chart, and this is a great example of how your mind will play tricks on you, the very first thing I thought of when I looked at this chart was, ooh, there's a bull channel here. Right? Mark up the highs. You can see my drawing tool won't even allow me to draw that shallow. See, this is how you know this is a range, right? My drawing tool won't even let me draw that shallow, right? Anyways, all kidding aside, the first thing I saw was, well, we're making higher highs. We're making some higher lows here. Okay, this is a bull channel. But then, right, like a good trader, I said, Joe, what are you thinking like a human being for? Think like a trader. How volatile is that channel, right? What's the slope? Is it 45 degrees? Is it going from lower left to upper right? No, it's not, right? It's a pathetic sideways channel, which means, yeah, it may work as support and resistance, but it's not going to give us the reliable rotation, right? We talk about this in the free trial. We talk about this everywhere in the intermediate and the advanced course, right? It's all about rotation. Whether you're a market auction person, a market profile, right, support, it doesn't matter what type of trader you are. If you're successful, you have to believe in rotation, rotating from overbought to oversold, from supply to demand, from support to resistance, rotation. When the channel is this flat, that's not going to be the most reliable tool. At least it's not usually. Most often it's going to be that range. And that's where we want to remind ourselves we're coming off of the high of that range, down to the low, back to the high, right? And then likely now to go back down to that low. Yes, there's a very small chance, right? Nothing's ever guaranteed that this will end up being that, right? That channel. And so if it is, we're going to know right away here. Right? If it is a channel, we'll know right away because it won't make its rotation back down to retest the low. It will finish its rotation back up to retest that high. All right? What I'm looking for tomorrow is a move back down to that low. This is going to be a bit of a pain in the butt, this falling resistance trend line. Again, focus on the range rotation, not the levels of support and resistance that are drawn outside of it. The most important thing will be range rotation. Go back to those lows, seller failure, back up to that high, up to the high. Again, assuming we get back to those lows, back to the high, buyer failure, back down to the low, seller failure, back to that high. We focus on rotation, we focus on failures, and don't forget about the pendulum swing, right? For example, let's say, for example, here that we break down, right? Make a nice big strong break lower, then we fail, right? And go back up into that range. Pendulum swings down, pendulum will swing back up. Remember, these markets are nothing more than balanced at this point. So when the market moves lower out of balance, it will almost always compensate the amount in the opposite direction. So watch out for a breakdown to a breakout, just about the same amount. We call that the pendulum swing. As of right now, buyers are drooling over buying opportunities at those lows, going back in, sellers selling the high, going back in. And what does it take to get a good, strong breakout? It'll take at least 2 attempts. 1, 2, hold the pullback if they can. Sellers are hunting for that 11,662. 1, 2, if buyers can hold, they're hunting for that 13,165. And by that point, we'll know where we have some trends, we'll know where we have some channels, we'll know where we have some measured moves, and we'll update the chart from there tomorrow. All right, a lot to cover here tonight. We got quad witching week. Tomorrow's a big, big day for us in our trade room, in our chat room. I look forward to seeing you guys there.